Good morning, everyone, and welcome. Before we start, we have a disclosure. Please be aware of risk in the future trading. Finally, the market broke up. We are on the right direction, and both of them long, long, long. There is no short, and this is good for Friday. Our first target on the ES, it will be 69.56. A little problem on the Nasdaq at the moment. Once we reach the 25,900 and 697. There is a little problems in this area here. Actually, this place here is a perfect entry, like what we have explained yesterday. This is an entry as we speak right now. You can go long on the ES right here, right now, in this market. And you have a lot of support, like what we were talked about yesterday with the stop loss. You have a lot of support, so you should enter market order. We're gonna be hitting the target 6,956. Excuse me, I have the flu today, so uh, we're going to that direction. Everything is nice and clean, no problems. Keep your eye on the Nasdaq. The Nasdaq 25,712. You have to be careful. The ES is climbing to this target here. This is coming from the market analyzer. It's 6,956. This is something if you want to take a profit or some of your profit. On the auto trade, I'm using a different auto trade. Is fixing to take one more trade right there. Already hit the daily target. Now we only have one left. Beautiful movement in the market. Maybe we can extend the last target on the Nasdaq. We have a fib at 25,736. We have 2741. So I'm going to leave it as is. It's okay. This is exactly where we told you I'm concerned about this yellow line, and there is a pullback, but should not scare you. On the ES, if you're not in the trade, you have a buy entry right there, right here. You have a buy entry, and you can put the stop loss like what we covered yesterday, a small stop loss right there if you're not in the trade. We're not your financial advisor. We just sharing what we are looking at. So continue to, from yesterday about the cheap stop loss is important to the trader. Whether you take the trade from here or here, the stop loss is the same place. It's the same place. So This is a pullback supported by double support, and your stop loss is hidden. Now, if you want it to be very safe, you can go all the way down here, but that is expensive. This is the safest place. So we just gonna use couple line. We put the stop loss below the couple line. So if you decided to take a market order in here, you still have the same stop loss right there. So the Nasdaq is going to break this yellow line, and the next bridge we're gonna be fuzzling with 25,735. It's very important because it's between the two yellow lines. When it's between, like what we said yesterday, between the two yellow lines, this is a place for reversal. You'll be surprised, but this is a place for reversal. Once the market entered those two yellow lines measure the previous highs and lows. You have the same two lines right there at the bottom. So when the market entered those two yellow lines, you should not allow your auto trade to activate long trade anymore. This is where potential to go short. And it is a very brilliant idea on a micro account. If you have one Nasdaq micro account, it's not expensive. You just leave it. This is the area. We don't know by the tick where it's going to turn around, but we know this is where the market will have a trend exhausted in there. So, and to cover what we were talking yesterday about, if you notice how the market, because of the support, pulling back, confirm this area, and if you want to, you can wait till the bar close, and then what you do, you take this one here and you put it. Now we are on a free trade, so we don't care if the market going back, or you don't extend the stop loss. You immediately break even, so you don't have a problem anymore to lose any money on it. So this is an idea. You can keep the stop loss in here. You can keep the stop loss in here, or you can immediately break even. So in case if the market dropped and fell to hold on the support, there is another potential entry is right there waiting on you, right here. And the stop loss on this one here is right below the double support area, and then you put the stop loss right there. There are plenty trades to take when you trade level and confirm the trend. This is the best. And as you see here, we have zero cost on that trade. So that's exactly what we need. Zero cost on that trade. We need to catch a trend. And if the market drop, we see what happened here, if the market able to hold or not. So look, so now what we are doing, we're watching this. It's a break even. It's not costing us any money anymore. As you see, the Nasdaq is hanging on this line. So that's why when the market enter this yellow line, you should never allow any kind of auto trade taking long trade anymore. This is where the amateur traders taking long and you are taking short. And then on this one here, it's very obvious the system calculate for you where you need to take a profit. So the target here, and there is a fib here. So immediately we can identify where you can sell the trade right there. So we know exactly when we take the trade, we know the destination of the trade. So uh, we know where is the second entry. We know what is the target. And you sit down, you are in charge with the market. Once you understand where are your levels and where are your targets and where are your entry. So we are ahead of the market. We know where the next trade is going to be. And this is the third trade is right there. Easy. This is this is the first trade. This is the second trade. This is the third trade. Right there. So there are plenty trades to trade, and you still can play it safely until you catch a trend. And this approach to the market, if you are not auto traded, uh, once you get the habit on it, you will make more money than auto trades. Because auto trade, they go forward and one equal to two. And, but when you use small stop losses, you can stay in the market longer. You don't blow your account. You trade levels. You measure the market. As you see, the buyers over the sellers from 1 to 60 minutes is long. So we are in the right direction and we are playing with levels. You can see how the Nasdaq, where we were concerned about this, and we said you should not take any more trades. Once this market entered the yellow line, and this is where the place we need to start taking a sell order. Now, right now here, when we are measuring those two instruments here on the upper corner, we can understand, uh, despite the buyers over the sellers, despite the let me see if there is any news. Maybe some news came out. So we know where is the pullback, what is the re-entry on the market. So here is the second one right there. On this one here is the entry right here, right there. Why? Because here's the support, and this is the yellow number where you need to re-enter the market. Always the market stop at this number. And on this one here, I put the order above the line, and then most likely you'll get filled and you hang on to this trade. So let's see. So there is already plenty places where we can take trades and uh, and the market until we catch a good trend and we stay with it. So now, as we see, before even the amateur traders can see that, we can see start getting weakness. Now we have the 1 and the 3 minutes in red, and we have on the ES the 1 and the 3 minutes in red, plus on the high time frame is in red. On top of that, some of the instruments start getting in red, and the buyers with the 6 different time frame, they start shrinking, and this is where the volatility is going to happen right here. The confusion in the market direction. This is where it's gonna occur among the traders. And as you see, the market came into the support and going back for a retest on 25,711. Also a cheap trade, always. So the stop loss on this one here is right there, right above, below that number, right here. And this one here, right there, under that line, here is your sell order right there. So now we're gonna monitor to see what happened. The market is sinking, is losing momentum, is getting weaker, start getting weak, and now it's getting really heavy. Total sideways market. You can see how it is going to get filled and how the market is going to stop at this number. Right there. Wow. You see where's the wick? Right there. Look. We missed that trade by a tick. Look at this. It's coming down. Now, if you notice, on the ES, the buyers and the sellers are equal. The 1 minute, 3 minutes is in red, and the 1 minute is in red, and the 30 minutes is in red. The market starts sinking. It starts getting weak. And this is the last stop for the long trades. This is this area here. Where is this number? This is the last stop for a long trade. If the market go below, this is short only. If the market above, is long only. Very simple. Above that number, we think only long. Below that number, we only think short. Simple. Excuse me, I really have a bad flu. You can see how the ES got filled, you see? Right, we got filled by the wick. You see? We know where the market going. And immediately, if you want to, because today is a high risk, what you do, you put a sell. So we are not losing any money anymore. And look how beautiful we got filled. I don't know if you can see this on YouTube. We got filled on the wick. You see? So, and here it is, $325. We took a couple of trades. We didn't lose any money in it. We didn't lose any money. And then there we go. Bang. We got $300, $400. We're done for today. $200 a day, $50,000 a year. And here it is. On the NASDAQ, I put it very conservative I didn't want to put it aggressive. I put it very conservative. I missed it. The reason I put one conservative and one aggressive, I put the ES aggressive and I put the NASDAQ conservative in case if this market break down, so I don't have two losing trades in my hand. And if the market pulled back, the other one is conservative trade, and the other one was an aggressive. So now what you see, we're gonna cancel that trade. This is, I don't want to teach, but I'll show you some tricks. This is where when the market hit the target, this is a reversal. It is a profit taking and reversal. So the system calculate, this is the target. So now you can see we were waiting on catching the trend on the ES, and we did with zero cost. Zero cost. We took a couple of trades before and we didn't catch the trend. Then at the end, we have catch the trend. Don't ever use a trailing stop. Don't ever use a trailing stop. So let's see where is the estimation on that trade. It's right there. Bang, right there. I know what is my destination on that trade. Now, if we wanted to take some profit, we can secure some of the profit by not using trailing stop. We put it right under the fib, right there. So we secure half of the profit. We don't want to use a trailing stop. And now the market climbing exactly to the maximized profit for that trade. And this is exactly what we want. And then bang, we got it. Now, I'm going to show you to flip the other direction on the NASDAQ. We know exactly the market analyzer has calculated here where is the target, and I know what is the target. To our traders, you are using the trading signal. This is not just a target. This is a reversal. You take a profit and you can reverse from this area here. That's what it is. So now on the auto trade, we got $6,000. And on this one here, I don't know why. We're not finished yet, but we will find out. We're going to finish. So this one here, nailed $6,000. Very nice. We're going to change it. We're going to put another chart. We're going to put swing trading on the NASDAQ. And swing trading at the moment is 7,900. Now, most of the traders, what they do, they use a trailing stop. You should not use a trailing stop. Another thing in the trading, you have to be a German-blooded man, whether you are from South America or you are from Brazil or hot country. You have to be very German about it. You see $600, there is no motion. Should I take it and leave, or should I keep it? You have to be very confirmed with yourself that if I take the $600-700 here, I'm not going back into the trading. I am done for today. You have to be very strict that you're not going to turn around and you are going to jump in another trade. If this number satisfies you, $712, take it and run. That's how you do it. So as we see, I already set up my target, and that's around $1,000 trade with zero cost. Zero cost. The most important, not the $1,000, is the cost of that trade is the more important. Now, if we like this trade, overwrite the chart, you can put your stop loss. You want to finish. You don't want to trade anymore. You give it a little space. You give it a little space. In case of this market turnaround, we can grab more money. And if the market went back in, we secured $500. Now, another things, what is the second trade on the ES? I don't need to guess. It's right here. If I get out of that trade, here is my second entry and a very secure double support, and my stop loss is right there, and I'm done. I already know what is the next step, and I'm going to leave it. I'm going to leave it. Now, the NASDAQ, further reversal, look what I had, the reversal trade, and now it's coming back. I'm going to be measuring the timing on the ES, if I get filled or not. And if I get filled and the market turn around, because I put it right in the right spot, then I will nail this NASDAQ right here. And the stop loss is right there, right under it. Cheap trade. Be as stingy as you can on the stop loss. Don't be gentlemen. Be gentlemen when you see profit, and be stingy as you can with the stop loss, cost base. So I'm already know where is my trades in there. Now, if you want to take the trade from here, let's say your Autotrade taking a trade here, where is your stop loss? Let's say it's somewhere around there. Okay, you're out in the open, vulnerable to be stopped out. You're out vulnerable on that. There is no protection for your Autotrade stop loss. It's up in the open. Anyone can grab it. When you put the order, also your FIB should not be from a used furniture store. Those FIB, they're not like what you see on those cheap app. You can see the same guy using the same line for 2 days, 3 days, or the whole day. Those they refit on the market condition, which we have made another one on different platform. It's amazing what we have done with it. So you cannot go stingy with your tools in order for you to earn money. You cannot be smart and take corners with the cheap tools. And you cannot sit down in the red light with a Skoda and the other guy have a Ferrari and you want to smoke him. You're not going to smoke him. He's going to smoke the hell out of you. So it also depends what kind of instruments or tools you are using. So as we see here, I already know what is the second entry on that trade. I could have left the previous trade to the break even and wait till it reach the 6,900. Now I need to cancel this one here. If you notice here, there is a little triangle giving you an indication it's going up again. When you see a star under the candle, it's telling you to go ahead. When you see there is no stars under the candle, you have to be careful. This means you're having a pullback. Be careful. The market analyzer keep calculating the target, and this is where you can reverse the market after the market hit. So we can always reverse the market from the target number, and now you can see the target has expanded to the higher level because it's measuring the market movement. It's not just a black box, take a profit 18 ticks or 19 ticks or 20 ticks. Every instrument is measuring the market movement and calculating. It's not just measuring, it's calculating. This is the most important to stay update where our target, where our fibs, where our entry. You are right up to date because the market is changed in phases. Every other minute, the market is changing. As you see right now, we have we have a projection plotted on the. It was not there before. Now we have a projection on 69.49. So now we need to keep our eye on it. We want to make sure this ES is going to cross this projection. This means we're going to hit. If this ES crosses this projection, we're going to hit the target, and final destination now is right there, 6958. And in this area here, it's not just taking a profit, it's a reversal area as well. Now we're going to cancel those trades. The entry has changed. Where is your entry on the NASDAQ? It's right there. Here is one. Always measure where is the yellow line. And here's number 2, right there. Those are your entry on the NASDAQ. On the ES, it's right there. This is the only place. You're not going to be taking long in this area right now and be vulnerable with your stop loss. You cannot do that. It's out in the open to be grabbed. You don't want to do that. We don't know right now with the weakness if the ES is going to cross this projection. So this is now you're increasing your risk in the trading, in any kind of trading. We go see the NASDAQ. We want to see the ES crossing this projection. You can see it's struggling. The ES is struggling with the projection. You can see it yourself. You can see the green line. And how in the hell? Because I can see this Autotrade took a trade long in here. He's doing his job. But this is a high risk because we want to see the bar close above this projection. If it is, we're going straight up. And you can see how the ES is struggling on this. Why you want to take a trade where the market is struggling? We want to see breakout. We need to see the bar close above. So now we can see look, it fell to break. So what we gonna have here on that auto trade? A losing trade. The auto trade doing his job. If this market crossed the projection, this auto trade on the Nasdaq, $360. Good, Harold. Very good, sir. Very good. And look, it's sitting here, the auto trade doing his job, but the performance on that trade is not because of the auto trade. The performance on that trade, if this ES able to cross the projection, it's not the auto trade, it's the projection. So the performance on this trade is not coming because we have a beautiful, nice eyes. The performance on this auto trade, doesn't matter what auto trade you are using, is hanging this performance based on the chart, if this market able to cross this projection or not. Has nothing to do with your auto trade or optimization or rank bar or range bar or ATR. Momentum has nothing to do with it. And now that trade become profitable because this market crossed this projection, not because of the auto trade, because of the ES cross a key point. Key point. He has crossed it. So that's what it is. So right now on the Nasdaq, we are on the swing trading. We climb into almost 10,000. He hit the 10,000 on that trade. I'm still confirming this is the end of the tunnel for the trend. It's right there, 69.59, right there. Now it's 10:38. We still have a plenty time to reach up. So wow, who's that? Harold. Okay, again, micro ES 215. Yes, what you said, Harold, 215. Wow. Okay, Harold. Finally. You see, this is what it is, Harold. You know, when you are just like any other trader, they come in, they are confused because there are too much information they need to learn. And then once they get it, they understand the trick in the market, they start printing money. This is from Harold. Yesterday he made 650 on a micro account, 650. And today on the Nasdaq micro account 360, and on the micro account 215. So I'm so glad you are using a micro account, but you can imagine when you start having confidence with yourself and you upgrade yourself to a mini Nasdaq or a mini ES, the total amount here, let's say, is 500 on a micro account. When you practice more and you are using an ES, an E-mini ES and E-mini Nasdaq, they are 5,000. So for a micro account, this is excellent. I don't trade micro account, but this is excellent for a micro account. Now, if we Now we can say we don't have a trade. This is something about discipline, folks. Oh, I'm scared I'm gonna lose a trend, and stay safe. I can take a long trade in here. I can take a long trade in here and put the target there. I know the market is going here, but I will stay disciplined. What is this number? It's right on the fib. I don't care if I miss a trend. Here is my buy order right here. And I am not going to give expensive trade. My stop loss on this Nasdaq, you have two options. You can make it very tiny and put a sell order right below, right there. Very tiny, not expensive. If you are more professional, you have one entry here and you have one entry here. What is the advantage when you put one entry here and one entry here if you have money for two contracts? If this market pulled back and re-entered right there and went against you, welcome to trade it. It's going to happen. Here is your second re-entry. What happened here when you get filled on both? You have an average price somewhere around 25,753. This is much easier to exit out of an average price than to go ahead and take two contracts in here, two eggs in one basket. You should never put no more than one lot, whether you are trading Bitcoin or trading Forex, your future, you put them in levels. And then if the first entry went to your favor, I'm going to show you a trick. We have an Autotrade, he does that. This Autotrade took a trade here, trade here, trade here, trade. This one here, you can use it on a micro account. Trade here and trade here. He averaged the price and he's climbing to the target. And you can tell him to take 6 trades, 4 trades, 3 trades. You can manage how many trades you allow the Autotrade to take. So, very good, Harold. You need to build your confidence. One thing, Harold, you should never let the market in control with your auto trade and your manual trade. As an example, I have an auto trade, make 10,000. If I want to go ahead take a profit, you can go ahead and close position here. Within a second, you're done. If you see the market not moving, you go ahead and you put pause on the market. And then you can, not when it's trading, when it's finished the trade, then the auto trade will not initiate a new trade. When you see the market start moving, you can release it and you can say, okay, go ahead and take a trade. As an example, you can see the market going long. You have a tremendous support. You don't want the auto trade to take long. A short, you say long only. Then the auto trade will only take long only. So if you want to take short trades only, you put this one here, short trade, and when you are done, you are a manual trading, excellent. Because once you learn your manual trading, auto trade, you can direct them like a pilot in the cockpit. You can direct this auto trade. As an example, You are auto traded, and we have been covering for years. Once the market enter between those two yellow lines, you should not take long trades anymore. Okay? So what we do, we're gonna close a trade in here, and we will say take a short trade only. Right now, it is a long trade. When the market starts sinking and is between the two yellow lines, and when the trend starts changing, your auto trade is taking short. We know when the market enter the two yellow line, you are not allowed to let any auto trade take a new position. Done. Over. Finished. We don't want to be one of those losers trying to grab $50 or $100. We need to stay disciplined, and when the market between those two yellow lines, there is no more long trade. Those we've been using it for many years. We are secure the performance on those, and they are working 8 out of 10 or 9 out of 10. So our trades go reversal in this area is 8 out of 10 or 9 out of 10. After many years, 16 years in the practice. So any auto trade enter a yellow area is the dead zone where you need to reverse. Vice versa, if you are auto trading and the market went inside those two yellow lines here at the bottom, you point your auto trade long. Now, maybe there is some cute trader, they say they don't have time. They get nervous. They've been abused when they were children. That's fine. Then leave the auto trade alone and let it take the trade. If you don't want to touch the market, we cannot force you touching the market. But if you wanted to extend your profit by engaging in the market, your performance is going to be at least 200% better than an auto trade, because you can see. Auto trade cannot see. Auto trade cannot see your fib lines, your sequence between the instruments. You cannot feed the auto trade all those information. So right now, we are about to hit the target for today. And I said that the daily target for today is around this area. And what I'm going to do, I'm going to be taking chances on it. And this is really how your confidence start building. You know, and I'm going to make it more aggressive. I'm going to put it right there. How about that? And then if I want to, I can be aggressive on this one. Where everybody taking a long trade, I will take a short trade, and then I will make it right above those fibs. And what I'm doing, I'm challenging the market. There is a tremendous buyers in here. The buyers over the sellers, and everything is saying a green, and I'm challenging the market itself. And if I get filled, where is my target? I already know what is my target. It's right there. Right there. Because if it's going to hit and get me filled on this, it's going to go back, retesting the support area. And if the support area didn't hold, it's going to drop right there. And look where the market's stopping. Right there. You are in charge, not the market, taking us by the nose. And look what happened. I missed. This is the story of my life. I always miss by one thing. And look what happened to the market. While those morons taking long, I'm sitting here waiting, taking short. How you make money? by over-trade idiots. By over-trade people don't want to learn the market. Where do you earn your money? You don't earn your money from an institutional. For every losing trade, there is a winning trade. And where your money coming from? From idiots trading, and they think they can get away with it. This is where your feed from. This is where your winning trades coming from. Bunch of idiots, they think they are smarter than the market. Or they can go ahead and go to the supermarket on Sunday afternoon, buy, sell indicator signal, and then they put it on one of those platforms, and then they're going to think they're going to get rich. Those are your investment. The more idiots in the market, the better for you. So we are climbing to this because you cannot get money out of institutionals. You cannot. So now look where I'm putting. I put the sell stop right there. And it is very challenging trade. Very challenging. Very. On those cases here, aggressive trade like this, look where the market stopped. Right there. You see? Look where the ES stopped. Right there. Ha! Here it is. Because it's an aggressive trade, you need to break even as soon as possible with this. You don't extend your 860 for today. I'm done. Yes, you are done today. So look at this baby. Look. Welcome to trading. Look at this baby. Probably if I break even, because it's very early and very aggressive, the minute this bar closed below, I'm going to break even immediately. Right now it's too early because the bar has not closed. I need the bar closed. The bar closed. And now free ride. Has no cost. Has no cost. Couple dollars to your broker. They deserve it. There is no cost. So if the market went down, that would have been $500 straight and has no cost for me. I'm going to do the same. I want to try my luck on the NASDAQ with this cheaper trade. Okay, what we are happening here, we come into the institutional target, 25,848 institutional target 1 and institutional target 2. On a Friday, those they usually hit around 11 o'clock. Now we are 5 minutes away from the institutional target, so we wait a little bit. Where is your sell trade on the NASDAQ? Right there. Where is your stop loss? Above the double resistance. This is for short. Where is my long trade? Right there. Where's my stop loss? Right there. I already know where is my entries. I don't need to scratch my head. I know where's my entries. And I don't care if the NASDAQ go up or down. I'm going to nail that little thing. You have to be flexible. Now, the ES is extremely strong. I'm watching it. If it's able to break the resistance, if it's not, then I'll grab it. Now, everything is indicated on the Nasdaq long. Everything is good. Long trade. I challenge the market. For me, I'm going to challenge the market and take chances on a small trade. I want to go reversal on it with a cheap stop loss. If it hit, it will be around $800 trade with a very low cost. So when you see a guy sell an indicator with 30 minutes Nasdaq or 30 minutes Bitcoin chart or 30 minutes ES and telling you his signal do not repaint, you just ask him how much it's going to cost me. Now on this one here, it's beautiful. Look at this. It came into this resistance and it's going to go down. I don't want to be aggressive. I'm not going to take short because I already waited on the Nasdaq to take short. So I cannot hold two aggressive trade. Always one aggressive trade and one conservative trade. So this was a cheap trade. If the market couldn't break the double support, resistance, hell, I make money. If it went up, that's fine. I'm going to nail it on the other direction. So here it is. The ES starts sinking. I'm keeping my eye on this one, and I'm keeping my eye on this. And look at this. You see, Harold, the power between the two yellow line? You see, when we said between the two yellow line, you should not anymore take long trade. That's why. Now, when you are auto trading and you are in the dangerous zone here, you have $13,000 on the trade. There is an exhaustion. It might fly 2, 5, 10 bars more. We don't know. Okay? But you are in a dangerous area in the chart. What name of God you don't take your profit and run? Why? Because this one here is a swing trading. Swing trading is not gonna close on the lower bar. It's not gonna close until he have verified the long trade is finished. So if we're gonna leave it to the auto trade, he might close at 10,000 and you have $13,000 here. Almost. You're gonna now it's 14,000. Probably if the direction change, it's gonna close around 10,000. So what you done, you threw $4,000 out of your way, out of the window. So sometimes when you know the levels and you know where it's dangerous, you say, this is my profit for today. I'm going to override the auto trade, because the first question they say, oh, your auto trade does not. No, your auto trade can close the trade by itself, can use a trailing stop, can use everything you want. We're using the highest technology. It's not that. It is estimation that you are in a dangerous area and it is time to take a profit. And now if we look at the clock, it's 11 o'clock. Now look at this baby on the Nasdaq. We don't have an expensive trade and we are hiding the stop loss above a double resistance. Two options. If the market's strong, it's gonna knock me out of that trade, and it did. If the market start getting weak, this is a potential $1,000 on that trade. Now it's coming to the institutional. On the institutional, it is now it's 11 o'clock, and probably it's going to be the first target for today on the 25,848. So you always have to take a risk on the small trade. You can afford it. If you are using a micro account, this is $10 investment in here. And if you are using the mini Nasdaq, is around $80 a trade risk. If it did go your direction, you are investing $80 against almost $800, 10 times the amount you are risking. So when you have this luxury to take chances, you should not be, oh, I need to go long because it's a long trade. I mean, when you become more advanced trader, you can start challenging the market itself. And today, it didn't make it. Tomorrow will make it. So if you have one losing trade, you should not be sad about it. You stay with it. You stay challenging the market, not following the market. And then until you catch a trend. And you find out you will have 10, 12 trades, manual trading. On a very bad day, you'll break even. On a very bad day, you will break even. You don't have any losses. And on a good day, you catch a couple of trends, you walk away with 1,000, 2,000, 3,000, depends on the market. Now the Nasdaq hit the target one. I don't know if you can see the wicks in there. The target one, profit taken on target one. And I would challenge again, on the ES, you have two type of a trade. You have one right here, which I would not advise it when it is between two yellow lines. But you have, if you want to be aggressive, this is one entry, stop loss right below the fib. The second trade is right there, which I like better to sell and make a stop loss just a few ticks above, right there. Just a few ticks. If it's make it or break it, doesn't matter. Now, after we hit the target one, those are not repaint reversal. We start getting reversal. Trend exhausted. Profit taken is 11 o'clock. People start taking a profit at 11 o'clock. Where's this Nasdaq going? Right there. Where's this ES going? Once you cross those, here's your first entry. And here's your second entry, right there. It's already been planned. It's right there, those two. So I already know where's the entry and where's the cheap entry and where most likely the market is going to reject. So I'm not getting excited with the movement, the market. I let the market do whatever the hell the market wants to do, and I stay firm. Where are my position on those chart? So when I put the stop loss here, when I try to take short in here on my trade, was not idiotic, because I know it is about time for this market to turn around, because it's between those two yellow lines. So of course I will take a chance with $80, $50. The reward is on a $50, $80, $800. Of course I will take a chance on it, because I know it's over. And that's what we said, it's over. And look, it's right between the two yellow lines. And we said, when it comes between the two yellow lines, you should never take long trades. Again, it's a place for reversal. So now if we notice, like what I have said, the market working like Rolex today is very easy. Here's the re-entry right there. There are two re-entry on the ES. One is a very aggressive, is right there. The second conservative trade is right here. And we can leave both, and we can dismiss the others. Those are old. Those are old also. You see where the Nasdaq stopped? Right there. Look. We know where it's going to stop ahead of time. And it looked like I missed by one tick. Look, the wick is right there. And it kicked right back up. So the difference, and look, we missed by one tick on that trade, because I wanted to be more conservative, and it's my, if I put it right there, I would have got filled. I already put my order, and you can see how the market, we know this market is going to kick back from here. We know that. So while the guy, he thinks he have a big gun with an ATR and momentum and MACD, by this time here, he fall in this trap, whether he's using Renko, RSI, momentum, ATR, Hikidu, whatever, banana indicator, whatever. From here to here, everyone on a short trade. One guy is in Honolulu auto trading, and one is in New York auto trading, and they all fall in the same trap. They went short while we were sitting here. We want to take long. And the same story applies for the ES. When the ES hit from the high 6964 and going all the way down to the 6956, from here to here, every single trader fall into the trap, or he's auto trading, he took short. We are the only one, we put a buy order because we know it's a pullback re-entry. One thing, identify trend, pullback re-entry. It's been around for 37 years, since when I started in the market, and it's going to stay with us. And where we put the order, and you can see how the market went up, and you can see how the market went up. This is the same trick is happening on the Bitcoin, on the currency, But every market, you need to approach it differently. You cannot, as an example, day trade Bitcoin. You cannot, as an example, day trade Forex. There is different type of trading for Forex because people get lost between fundamental and technical. When you combine fundamental and technical, you lose money. So you have one guy, he got up in the morning and he go on the multimedia and he say, Bitcoin is going to 160. Another guy, he had a grouchy wife. He got up grouchy. Now he thinks the Bitcoin going to 60. As a trader, those are his ideal people, smart, because their mother said they are smart. So this guy opened his platform and he don't know what the hell is going with the Bitcoin. Is it going to 160 or is it going to 80? Or he don't know because he listened to gossip, fundamental, not technical. And then what he does, he have an ATR, MACD, RSI, momentum. The same junk has been around for many years and has been tweaked. And now he have the AI to do it for him. You fit in the AI because he's not a trader. He don't know rules. He threw the RSI, the momentum, the ATR to the AI system and tell him make me auto trade or make a signal for me. And then when he's done, he probably sell potato at daytimes and he sell indicators at night. So this guy is feeding the AI junk with no formula. There is no experience about trading. Just something given the ATR, like where to buy, where to sell. They put a signal now, buy and sell. And they think they can get away with it by using 30 minutes chart. What is your stop loss on a Bitcoin with 30 minutes chart? What is your stop loss on an ES with 30 minutes chart? Yeah, we can put 30 minutes chart, looks good, profitable. But your stop loss, if you have $5,000 account on a bad day, couple of trades, your $5,000 are gone. We want to keep the money. We don't want to be generous. So if we notice here on this auto trade, we were playing between $13,000 and $14,000. If we go back to this chart on the NASDAQ, there is one time we were up to 16,000 and you didn't take a profit. You didn't take a profit. Now the market start showing you there is fatigue in the trend and it's a collapsing. And slowly, it's gonna start going under this one here. Once it go under this line, this means the short trades are on. The short trades are on. So why in the hell you keep this auto trade on? Why? On a Friday, you need to take a profit and run. So two traders using one auto trade, the same auto trade, does not mean they have the same performance. If one guy started at 9 o'clock and one guy started at 9:30, they will have two different performance. One, it is might make money and the other one will not make money on the same auto trade because he went in the wrong timing. So timing, discipline, cheap stop loss, those are your tools, your gears. It's not where is the dishwasher machine or where is the ATM machine is going to print money for me. Your gear is going to print money for you. Your discipline, your cheap stop loss, your target, you know exactly where you need to enter. When you see the market, chop market, stay the hell away. One trick, if you look at the chart visually, and you cannot tell if this market going long and short, don't start any auto trade. Don't start any auto trade. When you look at the market visually, and you cannot, if I look at the ES, and the ES is telling me 1 minute short and 1 minute long, stop everything. Go for coffee. Come back. Now, as we see here on the NASDAQ, from 16,000, we dropped to 13,000. The market is flirting on that number. You remember? It's flirting on that number. Look at this. It's sitting between two directions, long and short. So the market is trying to find a direction, and you want to jump on the trade. What makes you so sure you can? If the market don't have direction, why you think you know what is the direction in the market? Why? You have nothing. You're borrowing this ES and NASDAQ. You're borrowing it. You have no inventory. You have no impact on the market. The NASDAQ sitting on idle between long and short. What do you think if you're taking long or short on the NASDAQ is going to make any changes in the market? Nothing. You just lose money. We need confirmation that this market trend is over. Why this NASDAQ is hanging between short and long in here? Very easy. Very easy. Look at the NASDAQ. You have two red lines. The 1 minute losing. But the ES refusing to die. He have a lot of energy to go to the daily target, as we said, for this morning session. That's the most you can get out of the ES for the morning session. And that's what we said from the beginning. This is the most you're going to get out of that. Because when the NASDAQ came here, the ES did not respond with it. It wants to go the other direction. And here is the confliction. When the ES refuses to go in the same direction as the NASDAQ, you have a problem. You have a problem manual trading, and you have a problem auto trading, because they are not in sequence with the levels. They are not in the same direction. So there is always a fight between NASDAQ and ES. Either the ES is going to pull the NASDAQ to his direction, or the NASDAQ is going to take the ES to his direction. So there is a fight in there. And what you're doing, you jump in middle of the fight, and you expect it to make money. You cannot. So now, as you see here, the market is blocked. And also my mouth and my nose is plugged as well. Folks, that's all what we have for you today. We are 20 minutes over the timing. We say, wish you a very nice weekend. And to our traders, I have some templates for you. I have like 15, 20 templates. So please be at the webinar on Monday for the traders. And if you didn't receive an email, contact us and we will send you the link. It's the same link. We say thank you very much and God bless everyone.